Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 2nd. Following Tuesday's huge rally, the stock market cooled its jets on Wednesday, registering modest declines in the wake of Fed Chairman Bernanke's testimony on the economic outlook before the Joint Economic Committee. In some wide-reaching testimony, the acknowledgement by the Fed Chairman that real GDP will not grow much, if at all, over the first half of 2008 and could even contract slightly, served as a profit-taking catalyst. The contraction comment was the real focal point, yet Bernanke was simply asserting that it was a possibility, not a certainty. The comment from the Fed Chairman, nevertheless, and the International Monetary Fund cutting its global GDP forecast to 3.7% from 4.1% took some wind out of the market sails and curtailed some of the enthusiasm that followed a better-than-expected earnings report from retailer Best Buy and an estimate from payroll services company ADP that private payrolls rose 8,000 in March, versus an upwardly revised decline of 18,000 in February. Economists had been expecting a decline of roughly 45,000 positions in March. Separately, the Commerce Department reported a 1.3% decline in February factory orders, but that report didn't have any real impact on today's market. There was a period of renewed buying interest after a weekly inventory report from the Department of Energy showed a much larger than expected build in crude inventories. The headline initially prompted a drop of more than $1 in oil prices, but they soon rebounded on the indication that gasoline stockpiles fell more than expected, raising concerns about inventories ahead of the summer driving season. Oil ended today 3.8% higher at $104.86 per barrel. Gains across the energy complex drove the outperformance of the energy sector, which gained 1.4% and was the best performing of all 10 economic sectors. Commodities in general were strong Wednesday. The CRB index jumped 1.7%, aided by a pullback in the dollar that reflected concerns about growth and the potential for additional rate cuts. The basic materials sector drafted off the move and advanced 0.8% for the session. Overall, it was a fairly mixed trade, with 4 sectors moving higher and 6 sectors trading lower. Telecom services, down 1.1%, was the biggest loser. While the bulls would have preferred to see further gains after Tuesday's rally, the recognition that the major indices suffered only modest declines on Wednesday in the midst of some cautious-sounding economic commentary is apt to be seen still as a relatively satisfying outcome. Notably, the NYSE volume in today's retreat was much less than the volume seen in Tuesday's rally. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.